Good morning, everybody, and this is your Dow Jones setups for today. So we have started breaking some structure to the downside. Just want to put that level in. If you look left, you can see we spoke about it. It just looked like a really strong area of support, but we did break through it eventually, and it does look like we are continuing at the moment. So oscillators are just grouped to the downside on the 8th hour. I do not trust this one bit. Everything is lining up to say that we are moving to the downside, but it just does not. It stinks. Let me just put it that way. I don't trust it. When you drill down to or move out to the weekly, granted it is looking like a double top, but remember what I said earlier. I think it was last week or earlier in this week. 37,227 would be the neckline for that double top. That's the only time I would start looking at that as a double top. For now, this is a range. And you look left, there's nothing left. We're at all-time highs at the moment. So this to me is just a consolidation, as a big volatile consolidation at the top of a move. Let's look at the 3-hour. You can see last week we had the big move down. We've been going sideways for most of this week, and then eventually we sort of got, well, we just kind of dropped to the downside here. Now there is a big pin bar here that we have broken through right here, 38,816, and then look at the level of support that's just below us. Look how strong that zone is. And we're nearly there, so that's probably our target at the moment. 38,619, 38,620 would be my target. And if we start dropping down to the hour, trend is strong to the downside, a little bit different to what's happening, or what was happening on the S&P 500. Now the S&P 500 seems to be following. But for me at the moment, this is not a zone I want to be shorting. I'd rather be shorting off 39.12, 39.012. That would be a fairly decent area to short off, and then I'd be looking for 38.816 as my target, and then 38.619 is my next target. Those are the two levels that I would be paying attention to. Now, if you look at this on the 15-minute, strong downward trend, and let's see. So hindsight's always a perfect science, but this is actually a fairly decent setup. So firstly, starting with the open yesterday, you can see it was kind of chaotic, nothing really going on. I had this rejection bar off the gap. See my cursor's on the gap there. And then we had this big engulfing bar that moved down before consolidating and trying to come and test the break, and the break was at 39.086, but there was a whole lot of structure. So if you just put that zone in, you can see there's my pin bar, but then I had an engulfing bar, then an inside bar. A bit chaotic, but it was probably worth a shot. Your stop would have been up here, so you would have had a 100-point stop loss, and your potential, once it got going, would have been about 270. I think it peaked at 300. Yeah, it peaked at 300 before the buyers stepped in. So there was definitely an opportunity for a short there, just following the logic of the break. This was a strong area of support. I was expecting it to find support there, to be honest. So wasn't really in the mindset for shorts, but that also just shows you how you need to be flexible. And then if you are watching the lower time frames like this, it does indicate that you need to be awake, I suppose. But for me, this was a range. It was a range. It broke the range eventually, but it was a range. It was kind of a risky trade. But for those people that were on the 5 and 15 minutes, I mean, even the 5 minutes here, you can see in amongst the moving averages, big drop below. You're looking for a pullback. Come and test. And look here, there's a pin bar. Move that up to the pin bar. You can see there's a lot of structure here. But straight up the pin bar, and you can see how close it was. Very definitely something over here would have been, so you could even had a 50-point stop loss on the 5 minutes if that's what you were watching. And for as long as it stayed below the moving averages, you were in. Anyway, that's kind of that story. But I think for today, probably a little bit more the same. I think this is your target at the moment, 38,619. So just adjust your levels onto whatever looks logical, and that sort of looks fairly logical to me. There's a gap there as well. So if you reject 38,840, there's a small trade down to 38,619. If you start getting above 38,913, I'd be a little bit skeptical because you're probably going to see it reverse and rally to the upside. So just be careful. There are maybe some scalps on the lower time frames, but when you drill out to the 3 hour, you can see how the oscillators are at the moment. And if I just come to the daily as well, you can see I'm in a big zone of daily support, and look at my daily oscillators. They are separating quite nicely as well. And you can see this level of support that I'm talking about. The last thing here is if you take your Fibonacci, I'm pretty sure we are heading, yeah, look at that, 61.8 right here. So that's your downside target at the moment, 38,619. Don't go and jump in right here. Rather wait for a rejection higher up and look for those rejection levels on the hour. And you can see it would be bottom of range here, would be the most logical one at 39,023. So any pullback to 3,900, I think I'd take a shot at a short for a move down to this 38,619. May not materialize, may just come up to this level and then drop, or just continue along this trend that it's following right now until we get to the bottom. But I have a sneaky suspicion buyers are going to come in here, and for me that's more than likely a quick long scalp somewhere down here at 38,600. Anyway, that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.